morning, good afternoon, good evening to everyone. From wherever you're joining us from, you know that this is a global platform. We are very much excited and privileged to get the opportunity to host all of you this day, July 16, 2026, for a very, very important discussion that borders on Africa's international partnership, in this case, more specifically China. And so for those that are joining us for the first time, I will take this opportunity to tell you about who we are as an institution. And then I will introduce our guest speaker, who will have about 30 or so minutes to share on evidence-based research that she's been doing. And then it will follow by a Q&A session, and that's where all of you will come in. We trust that you've prepared enough and you have some key questions that you would like to ask our guest speaker. So I'll be moderating that session as well. And then, of course, we'll wrap up. So hopefully in give or take in an hour or so, we should be able to done with this very important discussion. So for ACCPA, the Africa-China Center for Policy and Advisory, we are the host of this important discussion. So we are a policy research and advisory think tank. We're headquartered here in Accra, Ghana. We have teams in multiple countries across the continent, as well as even in Europe and, of course, in Asia, China, more specifically. So we have DRC, we have Morocco, we have Tanzania, we have Botswana, we have DRC, we have Tunisia, and of course Ethiopia. So we are growing, and of course we have research fellows across all these countries. The aim is to elevate the African agency when it comes to policy, research, and advocacy that projects the continent's development agenda and interests in the scope of international partnership. And we much focus predominantly on China. We engage on other international partnership scope as well, but more predominantly on China. And so we do this through research, through policy advocacy that we do, through dialogues at platform, knowledge exchange platform like what we are having here today, which is virtual. We have in-person activities as well, and many other things that we do. So if you've been following us for a while, you know that we'll try to be as much active as possible. And so hopefully, if you are joining us for the first time, this will be the beginning of you partner with us to work. And so in that respect, I open the floor for any form of partnership. So if you are on this call and you think where you are working or institution you are leading, and you think there's a form of alignment that you believe we can work together, please do not hesitate to reach out. I'll put my email address in the chat box, and you feel free to send me an email directly, and I'll be more than happy to set up a meeting so we can discuss the potential collaboration that we can have. So that is about ACCPA, and so we look forward to engaging with all of you post this dialogue, and hopefully we can all work together to achieve a common good. Now, today, we are very much happy to have a very distinguished scholar to share her research and perspective with us on a very important topic that we have, rethinking Africa-China relations, trade, infrastructure, and manufacturing, right? And from the onset, I mean, we understand the things that headlines Africa-China relations, right? Infrastructure, big tickets infrastructure, talk about investment number, trade figures, and all of that. Those are very important, yes. But I think that usually leads us to more simplistic, view of what Africa-China relations, whether it's good or bad, right? Very simplistic in that sense. But I think we'll be doing ourselves disservice if that is the approach that always comes up, right? But we think that broadly, like the topic that we have, trying to understand how all this plays out in terms of Africa's own development trajectory, right? It's very important that we integrate that very much. And so we believe that these are some of the things that we can do as an institution to engage researchers who give evidence-based, insight on the work that they are doing regarding this very trajectory that we try to, engage on, that sort of shift the focus from a simplistic view of what Africa and China relation is to, looking at other nuances that can make more meaningful, contributions, in terms of policy direction for African government and other international partners who are also looking into the Sino-African space. So for us, we're very much excited to have the chance to engage a very distinguished scholar in that regard here today on this webinar. So I'll just read a profile, right? So today we are very privileged to have Dr. Elisa Gambino, maybe she will mention her name correctly. She's a lecturer in globalization, trade, and development at the Global Development Institute of the University of Manchester. And she's also an adjunct researcher at the Center of Asian Studies at the University of Ghana. Elisa's research explores the rise of South-South engagement with a focus on the intersection between China's outward economic engagement and Africa's development trajectories. Elisa is currently completing a 3-year Houseworth project titled African Hubs, Chinese Trade and Global Circulation, which explores the development implications of Chinese private capital internationalization for regional integration and industrialization in West Africa. She has published in leading academic journals such as the Review of International Political Economy and International Affairs, as well as undertaking consultancy projects in both public and private sectors. So, ladies and gentlemen, to do us an honest of sharing her perspective and research findings with us is Dr. Elisa Gambino from the University of Manchester. Elisa, please, you have the floor now. You may begin to share your screen. And of course, we look forward to hearing your insight. Thank you.
Thanks so much, Paul, for the introduction, and also thank you for the invitation. It's a pleasure to meet you all, and I very much look forward to a productive discussion. I hope you can see it, the slide. Yes. Fantastic, brilliant, because I have 2 screens, so I'm not really sure where it's sitting, but I'm glad you can see it. Fantastic. So as Paul mentioned, today I'll be drawing from my research to talk about 3 sort of sectors to kind of evaluate the extent to which the engagement of Chinese actors in these sectors are bringing about some form of reshaping in the context of industrial development. What I will try to do today through different case studies and some of my most recent work is to kind of look at these 3 sectors and what they have in common. So first of all, I'll talk about infrastructure and say that it has proven to be like quite a central entry point for Chinese companies into African markets. Of course, we've seen a lot of roads, bridges, ports that have generated employment along the way. However, on its own, engagement in infrastructure has not really translated in a growth in industrialization. And this promise that is really underpinning a lot of the development agendas of African countries, the fact that once infrastructures are built, economic activity will sort of flourish around it, has been quite unfulfilled. The second, I'll focus on trade, and I'll talk about specifically about Chinese traders and the shops, both retail and wholesale, that they've been opening across many African markets. And this shift has been very prominent over the last 2 decades, but especially in the last 7 to 10 years. And I'll talk about how a handful of African traders and counterparts have benefited from this engagement. However, there's also been a lot of displacement of local traders due to the rise in Chinese trade localization in African markets. And finally, I'll talk about manufacturing, which is where a lot of the recent activity has been concentrated, and especially where a lot of my research has been focusing on. And I'll talk about how it has generated employment, it has broadened the industrial base. However, the labor conditions remain quite uneven. There's very limited technology transfer, and generally, local firms are not integrated into value chains that are led or that see a very large share of Chinese participation. And this brings about very important questions around how African firms can participate to global value chains, regional value chains, but also how upgrading can happen in this context. So across all of these three sectors, we can see that, of course, there's have been some creation of employment and broadening of the industrial base, but this has had limited spillovers for local industrial development. I'll do that by just briefly contextualizing China-Africa relations, although I hope and I imagine that a lot of you will be familiar with it. I'll then go through the three sectors: infrastructure, trade, manufacturing, draw out the implications, and then finally conclude. So in this slide, you can see three graphs from the China-Africa Research Initiative. On the top left, you can see the trade, the China-Africa trade between 2005 and 2024. We can see that has been sort of pretty much going quite steadily. Nevertheless, there's still an imbalance in terms of the type of products that are exported from Africa into the Chinese market, which are mainly raw and unprocessed materials or natural resources, agricultural resources. But I think the most important part of this slide is actually the one on the right, where you can see maybe I can move this. So, can you see better? Yeah. That you can see the loans to African infrastructure and the revenues of Chinese companies from projects in Africa. And if we look at the loans, we see on the top right, we see that the amount of lending from Chinese state-backed funding to African infrastructure has decreased quite consistently, a trend that already started before the pandemic, but that was really heightened during the pandemic. But at the same time, we can see that in the same period, the revenues of Chinese companies from projects in Africa have not decreased at the same speed. And I'd like you to sort of keep this in mind as I go along in this discussion. So my research agenda has thus far focused, as Paul mentioned, on looking at how the internationalization of Chinese capital and more broadly China's outward economic engagement is intersecting with the development trajectories of African economies. My previous project focused specifically on infrastructure with Chinese participation, and I was looking at the case of Kenya. And my current work, I'm focusing mainly on private companies and companies in the trade and manufacturing sectors with two country case studies in Ghana and Togo. And most of my work is around what is known as the concept of embeddedness, which refers to the ways in which companies are inserting themselves in markets, trade networks, distribution networks, as well as maintaining relationships with funders in China and with other Chinese companies in local, but also in other African countries, and how all of these relations are supporting Chinese companies in continuing their market expansion across different sectors. In the past sort of 3 years and a half, I've been mainly focusing on working in Ghana and Togo. I've conducted over 17 months of fieldwork mostly in Ghana, but also in Togo and recently actually in China. I just got back a few weeks ago. I mainly do interviews and site visits in Chinese shops or to factories, and interviews both with Chinese managers and workers, African, in this case, mainly I'll talk about Ghana a lot during this presentation, in Ghanaian officials, in ministries, parastatal organization, union leaders and workers, as well as private sector actors like business associations or other foreign companies that are not Chinese, and as well as Ghanaian companies. I've also conducted stakeholder engagement meetings in Togo with traders and in Ghana with different institutions, sort of working together to think about some of the challenges in managing and engaging with Chinese actors. And over the past 2 years, I've also conducted a geolocation by walking across the Greater Accra region and finding Chinese factories and shops, and combining this with registration data that was made available by the Ghanaian institutions. And finally, I spend time in markets to conduct ethnographic observations, looking at how Chinese goods are being marketed and how they're being sold, and what the impact of the growing presence of Chinese trader in physical markets in Ghana and Togo is having on local traders. So, as I mentioned earlier, although the decrease in Chinese loans has been quite stark, there's actually been quite a steady participation of a Chinese contractor in terms of the participation to construction projects. This is related to quite a few different factors. First of all, is that in the past, Chinese loans, when Chinese loans were at their height, this was supporting a lot of Chinese state-owned enterprises, which were quite linked to state apparatus in China, to engage in the construction of Chinese finance projects and enter new markets. But as the funding decreased, this company, especially Chinese state-owned enterprises, were still able to maintain their market. And in my work, I look at this through the lens of the networks and relations that they have built, and try to highlight what are the advantages that Chinese state-owned enterprises have in the infrastructure sector. So, as I mentioned, Chinese state-funded projects were a crucial part of it. There was also an increase on the demand side in African countries, especially as the African Union Agenda 2063 is especially focused on the development of infrastructure. And so there was a growing need for infrastructure financing. The companies have quite strong relations at home. This is because they're often very large business groups in the context of Chinese economy. And I think it's worth sort of stopping a second here to think about how Chinese state-owned enterprises have gotten this big and this capable in terms of their overseas operations. So over the past 3.5 decades, or 4 by now, the Chinese state has embarked in a range of reforms that have combined and guided a series of merger and acquisitions that have led to the formation of very powerful business groups. For example, one of the companies that I focused on includes more than 60 different enterprises, which means that they can access machinery, insurance, and other parts of their value chain directly from within the company. But in general, only in 10 years, between 2003 and 2013, the number of Chinese companies under the assets of the state regulator SASAC fell from 200 to 113. And so this shows us how a lot of these businesses actually end up being agglomerated rather than being shut or privatized. And this consolidation is also part of why there's few Chinese companies in this sector that are extremely, extremely successful and operate at large scale. And we can also see the trend by looking at the projects not financed by China and seeing how companies have actually increased the percentage share of the projects above 50 million that they win on the African continent. And this is part of the kind of both the expansion and the solidification process of this work, of the work of these companies, as during the process of building Chinese infrastructure, they were able to engage with African ministries, state agencies, and other associations that have also supported the expansion of their networks that now allow them to scout projects actively, sometimes proposing projects through feasibility studies. And this leads them to be able to mobilize at very low cost because they need to move machineries and personnel from a nearby project rather than coming from abroad. And this means that they're able to have lower costs compared to other international contractors. There is something to be noted, which is that as part of the solidification process, especially when Chinese state funding dropped significantly, Chinese companies also began to act as a subcontractor and sort of acquire projects from local companies that were awarded projects but did not have the capacity of implementing it. And this is actually something that we wrote in the Review of International Political Economy paper titled Flexible Embeddedness, where we look at how both in Ghana and Kenya, there are examples of Chinese companies acquiring the project from local companies that have won tenders that were earmarked for local contractors. And so at times, the rapid expansion of these companies can also hinder the participation of local contractors. When we think about infrastructure, I think there's often this assumption that it will lead to connectivity, faster transport of goods and people, but also create employment and have spillovers into the industrial sectors. However, as I think has become quite obvious and quite evident across the African continent, but also beyond, building infrastructure alone doesn't really lead to spillovers in the industrial sector, but actually the political and policy context is the biggest determinant of whether infrastructure will have an impact and an influence in fostering production, industrialization, and intra-African trade from the connectivity side. Another big factor is the extent to which competition amongst countries in attracting investment and attracting trade flows play out. And often the competition amongst neighboring countries or amongst the region can have a detrimental impact on the development of industry and the development of infrastructure projects that have a regional significance. I think one of the important parts to also mention here is that my own research on West Africa suggests that actually proximity to consumers seems to be a better determinant for industry, especially Chinese factories to develop. And this is also the case for traders that seek to insert themselves in the very lively markets that characterize West African economies and beyond. And this is because most of the Chinese companies that operate in the manufacturing and trade sectors are serving local consumers. So they are either importing or producing products that end up circulating in African markets. I wanted to take one example of a company that has become quite ubiquitous across the African continent, which is China Mall. I imagine that a lot of you have seen and been to China malls around. And I wanted to, on the map on the right, you can see highlighted all of the countries in which China malls, whether the actual China Mall brand or similar brands operate. And we can see that they're quite widespread across, especially West Africa, Eastern and Southern Africa. And these are retail outlets that are serving local consumers, selling all sorts of products from children toys to makeup and sometimes also some food products. And I want to highlight sort of how these have emerged and what the implications are for local traders in West Africa. So I want to zoom in now on the case of Ghana, which actually hosts quite a large number of these shops, both the China malls and the similar brands. And to do so, I think it's important to kind of contextualize how the Chinese presence has evolved. From the late 40s to the mid 2010s onward. Actually, the period that I focus on the most is the mid 1990s to the current moment. And that's where a lot of entrepreneurial migration has taken place. Of course, state-owned enterprises have been part of the story, but for the trade and manufacturing sector, a lot of the factories and shops have been opened by people that either previously were working on infrastructure projects or that have heard from their kinship and regional networks in China that there are great market opportunities. In Ghana specifically, there's also been strong migration associated with the small-scale mining sector, which has created a lot of public debate because since 2006, in the Ghanaian gold mining sector, foreigners are not allowed to be involved in small-scale mining, and this has become quite a concern, especially because of the ramifications onto the environment and the water bodies in the country. And the actors that are involved here, they're often fairly small firms. However, there's also a few multinationals that have retail or production plants across the country. I wanted to zoom in here on the example of the market. And if some of you who are from Ghana have been to Makola Market recently, you might have noticed that the number of Chinese shops has increased quite extensively, but also that shoes have become kind of like a centerpiece of the Chinese products that are being sold. And actually, shoes are about 4% of Ghana's total imports from China and are now seemingly everywhere in the context of the market. In the shops like China Mall or EU Chinatown, you can also find Chinese shoes, but I would say that Makola Market is potentially the biggest place to buy wholesale shoes. I think it's important to highlight the role of local actors and how they have shaped the presence of Chinese traders. Before 2013, before the Ghana Investment Promotion Act was released and was enacted, citizens from all over the world could open retail shops and operate within market spaces. However, after this law was passed, only Ghanaian citizens are supposed to have retail shops unless there's an initial investment, entry investment requirement of $1 million. And this act has recently actually been revised just earlier this year. And on the back of this 2013 law, the Ghana Union of Traders Association has spent a lot of effort in organizing lockups of shops, threatening legal action, and also submitting requests for formal amendment of the law in order to protect the retail sector from the rapid increase of foreign nationals, especially from China and Nigeria. This has, to some extent, led to the closure of a lot of the Chinese retail shops, especially, or their conversion into wholesale-only shops. This has especially been the case in terms of the registration numbers that we see in the government data. However, at the same time, the overall number of shops has actually grown. And as we'll see in the manufacturing part, some of the traders, quite a considerable amount, have shifted into manufacturing some of the products that they were selling and are now producing in small factories scattered all around the capital region of Greater Accra and beyond, especially in Kumasi. And I'll come back to this part in the next section of my presentation. But not every trader has felt the increase of Chinese shops the same way. This depends a lot by the size, the type of products, but also the type of sale that these shops have. And of course, by the collective agency that they have in terms of organizing around trade unions. I want to make two examples here. The first is curtains, and the second is around all things that make noise, so musical instruments and speakers. In the context of the curtains, for example, the shops that were selling only retail in Makola Market have suffered considerably. Because the China malls present the curtains in quite a different way. They're already finished, they're already been sewn, and so you can see them on the shelves. While in Makola Market, if one wants one curtain, one needs to go there, give the measurements, and then come back to pick it up, which has also shifted some of the consumer perception. And this is one of the points that, for example, Marco Bang from the University of Ghana makes in some of his writing. But I think trade unions can also play quite an important role, depending, I think, on the product that they are focusing on. And so there are subsections of the Ghana Union of Traders Association that focus specifically on different subsectors of trade. And in my research, I've come across the speakers and sort of an entertainment and musical instrument association that has supported their businesses in protecting the context, for example, by going to speak to shop owners directly if they heard that other actors, especially Chinese shopkeepers, were trying to open in the same sector. I also think, however, that the product here is very important because speakers are mainly sold to schools, for programs, to churches, and for political rallies. And this, of course, means that there needs to be quite a strong knowledge and embeddedness in the local market to be able to expand in the sector. But there is a trend whereby a lot of traders are being pushed out of the market spaces because of the rise in rent of the shops due to Chinese traders paying more for their real estate. One of the important parts, I think, to highlight is, however, that local distribution and local retail networks are also very, very important, as well as petty traders that are often making a living of selling daily products that are imported from China. One of the strengths of a lot of the Chinese companies is that they're able to adapt the products based on local consumer feedback. At times, those that are focused on the logistics and distribution part are able to gain, the sort of African partners of these firms are able to gain sufficient profits to then reinvest into shops or real estate and diversify their business away from a reliance on their relations with Chinese companies. This has been the case for some of my participants in Togo, and there has been a few examples in Ghana as well, although to a lesser extent. I wanted to bring in a case study here of the company Tecno, which is under the holding Transsion. I think you've probably heard of this phone company. They're quite popular because they have adapted some of their technology to the local market, for example, by improving the battery life, making more SIM card slots, as well as modifying the camera so that it better captures Africans while taking pictures, especially in dark settings, like in the evening. And this company, there's a recent book by Miao Lu, based in Lingang University in Hong Kong, who has done extensive research on the distribution and the marketing model of Tecno. And the company has built a very extensive network of local distributors and retailers, and has done so through what it's called the bottom of the pyramid approach, meaning starting instead from like large centers in major cities. It has started by marketing the products in rural areas and eventually building systems of distributors. But it has done so through reliance on local partners that have knowledge and the ability to engage consumers and to bring them into the sort of techno network and sphere. But one of the things that has been happening recently is that this Chinese company, now faced with increased competition, is now sidelining the very, very same actors that have supported its expansion. And so the African distributors are being sidelined in the next phase of this company's strategy. And I think this is quite telling in terms of the volatility of some of these connections and the importance of African partners to be able to diversify their business in order to sustain some of the shocks that might come in light of growing competition. One of the things that has become quite evident is that there has been a shift from trade to manufacturing. And so, in general, more and more manufacturing companies are opening. So, in Ghana, for example, more than half of all the Chinese registered companies between 2014 and 2021 are actually in the manufacturing sector. Between 2004 and 2024, about almost 450 Chinese manufacturing companies registered in Ghana. And in the map to the right, you can see sort of the location of these companies. And you can see, for example, that Greater Accra is actually the one with the highest concentration of firms. I don't know if you can see my mouse, but I'm trying to point at it. And however, also we can see Ashanti region as being quite an important one. So some emerged because traders made returns importing the same products, and they've decided to start producing in loco. Others are multinationals that are already producing across different African countries, and some more instead are individual entrepreneurs or joint ventures with entrepreneurs or investors that are already located in Ghana. I wanted to also highlight one very important point, which is the fact that as I mentioned earlier, I did do some geolocation. So I created original data sets of where Chinese companies are located in Greater Accra. And one of the most important findings, and I think is quite clear from these side-by-side maps, on the left-hand side is the government data, and on the right-hand side is the geolocation data. We can see that actually, while we managed to capture less companies, although I should mention that the government data sets don't actually account for when a company closes, so the number might not be accurate. But I think the stark difference is actually the location, because the darker the green, the more companies are located there. And we can see that the regions on the right, which is Shayo Sudoku and Prampan, are actually the two regions where some of the Chinese industrial clusters are located. And I kindly ask you to keep this in mind, because I'll come back to this point around clusters very, very soon. I wanted to also bring some examples to kind of put a bit of empirical material around my argument. One is the company Twyford Ceramics, which is a joint venture between Keda Industrial Group and Sunda International. It was the first Ghana-based Chinese company to export tiles, to export under the African Continental Free Trade Area in 2022. But this was actually part of a project, of a trial initiative by the African Continental Free Trade Area. And they haven't actually exported through African Continental Free Trade Area again. They do, however, export extensively within the ECOWAS region. And on the map on the right, you can see where they are located in terms of their production in Africa. And they have developed distribution networks from these production hubs into neighboring countries. And so they're making the most of the regional economic communities and the regional integration efforts that have been made within them, rather than going for African Continental Free Trade Area protocols. I also wanted to highlight other examples. There's, for example, one company that I've been focusing on, which produces PVC tubes, that has been operating in the country for 20 years and now combines a mix of imported and locally recycled materials to produce PVC. It has employed around 300 workers over 2 factories. And recently, they have expanded into assembling light bulbs that then they sell to China most. I think this is quite an interesting case, because it shows, first of all, the long-term outlook and interest that Chinese companies have been displaying towards African markets because of the growing size of this market and the growing purchasing power of African consumers. And at the same time, we see 2 aspects as well. First is the connections with other businesses, and so selling Africa-made Chinese products in Chinese shops for African consumers. And on the other hand, we also see diversification as a key expansion mechanism. And I'll come back to this in a second. And as I mentioned, the size of these companies vary extensively. I have cases that are multinational companies like Twyford and others, and I also have cases that are an individual production line in a small warehouse, and so quite often quite informal. So there's quite a range, and they do tend to have quite different outcomes. I wanted to zoom in 1 second into the industrial clusters, because I think this is quite an important part for kind of thinking about the spillovers. So industrial clusters are referred to as it's like an agglomeration of companies in spatial proximity. And they're usually thought about of clusters if there's some degree of engagement between the companies within these clusters. So the idea behind them is that, for example, special economic zones can be a type of cluster, right? So the idea is that if you lower transaction costs within the clusters, if there is a labor pool that can be shared amongst the companies inside it, and there's some sort of informal knowledge sharing, this will lead to spillovers, technology transfer, innovation, and generally upgrading of companies within it and their suppliers by consequence. However, these theories have been developed in a period of the global economy that was dominated by multinationals based in the global north that were producing across different developing countries to then export the finished products back into global north markets. And I think this context has shifted quite rapidly, which means that some of the assumptions behind special economic zones and industrial clusters might not actually be materializing right now. The first is the fact that most of the companies serve the local consumers, which means that the upgrading based on standards being set by multinational corporations or recently, for example, think of the EU CBAM regulations, right? So regulations around standards that can lead to the upgrading of the production process or product might not be possible because the end market is not the market of the global north, but is the local market. And so the standards to be fulfilled are the one of the local market. And many companies actually struggle to fulfill those standards. But beyond that, I think there's some interesting findings in terms of the clusters, and I'd be very happy to discuss the methodology in more detail because this comes mainly from the geolocation data that we collected through field-based exercise and observation. So we found that actually most of the companies that are in clusters produce products that are more complex than the Ghanaian average. And we measured this through the Harvard developed product complexity index. And in doing so, we realized, however, that clusters that are formal, like special economic zones, they actually produce more complex product, but they are all scattered in different industries. And this leads to the point around knowledge sharing and a shared labor pool, right? Because if you have companies working across a range of sectors, it's less likely that there will be a shared labor pool and informal knowledge sharing that can lead to upgrading and innovation. One of the key findings is connections to local suppliers remain quite limited. And actually, one trend that we've seen is that between the 2 decades, between 2004 and 2014, and then 2014 to 2024, Chinese manufacturers have actually begun producing more industrial input products. So, for example, PVC tubes that go into the construction sector or nails that can be used in another production line. And as I mentioned, in general, African consumers are the target market, and we still see a major prominence of African distributors and traders moving these products, especially across borders. There are some examples. There's one in Togo where a manufacturer has developed its own logistics and distribution. But it did it the other way around. So it was already distributing and selling and then it went into manufacturing of the same product. Meanwhile, the companies that set up as manufacturers tend to typically sell to local distributors who then engage in cross-border trade. So it's very difficult to trace the amount of cross-border trade of these Africa-made Chinese products because of this. Nevertheless, there have been examples, especially in the recent year, where one Chinese industrial park has begun opening wholesale shops and is now developing a logistics company as well. And so we see sort of local actors being pushed down the supply chain as well. I think that I wanted to sort of mention these outcomes because I think the outcomes are quite varied amongst manufacturers. And here you can just see a few pictures from some factories that in an industrial park. But I think in some cases, we do see companies that are sourcing locally and serving the local market in some ways that they're building linkages with local companies, especially with their suppliers. In other cases, companies struggle to fulfill production requirements. For example, you might have seen on the news in Ghana not long ago that a Chinese mattress production company was shut down because they were using plastics to produce their mattresses that is not conformant and is not compliant with Ghanaian standards. So the Ghana Standards Authority initially closed the company and told them to halt all operations, but the company resumed production, and eventually some of its managers were arrested, and this was just last month, I think. I think this points to the fact that depending on the type of setup and supply chain that these companies develop, they can have quite different development outcomes. Some that have more of a support role in terms of fostering the broadening of the industrial base amongst local producers, and others that instead tend to sideline and often outcompete local firms. As I'm coming to the end, sorry for being a bit long over time, I wanted to kind of highlight some of the policy priorities that I think are quite crucial, because we've seen that across infrastructure, trade, and manufacturing, there's a few variables that sort of keep coming back in terms of determining whether Chinese engagement is supporting local development or is instead crowding out local actors. I think these are relative to the size, the product, the type of actor, but also whether it's state-driven or market-driven. And I think the sort of presence or not of collective organizations, such as collective actions in the form of unions, for example, is quite important. But of course, the regulatory environment is still super crucial in terms of shaping how foreign direct investment from China or participation in infrastructure development are then localized and can bring benefits to local companies and actors. And briefly, I think there are some more specific sort of findings in terms of policy priorities for Ghana, and I think these are mainly to harmonize the regulation of trade and investment, because right now they are spread across different legal instruments. And the definition of trading within the law is unclear and leaves space for sort of gray areas to be exploited. I think also one key point is to try to recenter foreign direct investment as an engine of development. And so instead of developing policy to attract foreign direct investment, for example, by centering fiscal incentives at arrival, it would be important to focus on making sure that companies are localizing, they're developing linkages with local producers, and also that there is skill transfer. And so developing policy that can guide foreign companies into localizing. And in terms of the broader continental picture, especially around the development of the African continental free trade area, I think there's quite a lot of potential in terms of developing rules of origin that can provide a strong lever to support the development of regional value chains and the insertion and centrality of local producers within them. But I think the coordination amongst member states is super important. And this is a point also for regional economic communities, because a race to the bottom can really hinder the impact of the sort of spillovers of the Chinese presence. We've already seen some of this competition unfold within transport corridors and ports development, with neighboring countries competing for value capture and trade capture through infrastructure development. And this has hindered the sort of connectivity agenda of regional economic communities and the broader African Union. So I thank you, and I very much look forward to the discussion.
Right. Thank you. Thank you very much, Elisa. That was a very, very insightful insights that you've shared. And of course, there are a lot of takeaways. But I think that the foundational thing is that you've really challenged us on some of the conventional knowledge that surrounds Africa-China relations, especially when we mention issues around infrastructure and investment and manufacturing and trade. As you rightly mentioned, infrastructure, as we know, yes, creates opportunities for industrial growth, but like I said, it's not automatic, right? The outcomes are automatic, right? And I think it's very key, and especially drawing on all your field, experience, especially in Ghana. I think most of the Ghanaians that are on this webinar really appreciate the insight that you shared, because I think we are talking about lived experience here, right? So I'm sure almost every Ghanaian on this very much call would have visited, at least a China mall, bought something there, and all of that, right? I think it's something that has come in. And we have the China EU, the EU China mall, as you mentioned. We have the Panda Mart, right? So there's a Panda Mart.
Yes.
Yeah, so they are all in the same family, right? So I think those are very insightful, findings, and we're very much excited. And I think one of the things that also stood out is about the decline of Chinese loan, and also, point that does not really mean, disengagement, right? Because as you said, pool of network that is still able to sustain, and all these things happen. So I think it's very insightful. Oh, if you have questions, please use the Q&A button, and I'll read out the question. I know there's one question, but before that, I'm going to ask one or two questions to Elisa based on her presentation. But we welcome all of you to please send in your questions via the Q&A button, and I'll read it out to Elisa for her to answer. And so it's a Q&A session now. So please do send in your questions so that I can get her to answer that. Yeah. So my first question on my last point that I raised, which was on declining Chinese loans, right? So you presented that Chinese take-back lending has declined significantly based on the China Africa Research Institute's findings, data. But then Chinese firms continue to secure infrastructure contracts across Africa. So my question is, does that suggest that we are witnessing maybe a structural shift in China's engagement, and maybe from state finance infrastructure towards a more commercially driven model? And if so, what does it mean for African governments who have over the period, engaged China? Because most of the visible infrastructure that you see in Africa for the last 2 or so decades, actually, you trace its route to China, being the one behind, mostly, like you said, through state-owned enterprise that have been leading. So now that is declining in terms of the loan structure. What is going to be the approach now? What is that structural shift in the context of China's engagement in Africa and infrastructure? But then again, also more so, what would that mean for African policymakers? Yeah, that's my first question.
Thanks so much, Paul. That's a great question, actually. And I think this trend has been one of the things that I've been focusing on the most, actually, in my previous research, because it was very interesting to see how the general a lot of the mainstream debates around China Africa, right, were focused on this idea of like all these loans for infrastructure. And it is like kind of like part of a broader Chinese state strategy, which is debates that I haven't really felt as in agreement with as other scholars, right? And to me, it was particularly interesting in my previous project to actually choose one project that was not built by that was built by a Chinese company, but that was not funded by China, and to kind of try and look at the power relations in these projects compared to projects that are being financed by China and constructed by Chinese firms to kind of see the differences. And that's how this whole a paper of Review of International Political Economy came into being, because we realized that by comparing the work that I had done in Kenya with the one that my colleague Costanza Franceschini did in Ghana, we then realized that the trajectory of internationalization was actually quite similar, and that Chinese companies, Chinese construction companies, behave much more in a like any other construction company in the world, right? And so we were wondering whether then are the trends sectoral? So should we then focus on different types of infrastructure and see if there's a trend there? Or should we then center what are the characteristics of their internationalization process that make them so successful? We decided to do the latter because that's where we had most of our data. And we kind of traced the evolution of their role. And I do agree with you that there is a shift towards a more commercial based engagement in the infrastructure sector. This might not be the case in other sectors. For example, I imagine in critical minerals mining, right, is more likely to be state-owned companies that are quite linked to the state. But Chinese state-owned companies in the construction sector can also operate with quite a degree of operational autonomy, which makes them very flexible in terms of reacting to market shifts, scouting projects, or participating to international tenders. And I think the fact that Chinese companies are winning a lot of tenders that are open internationally, including World Bank tenders, is quite telling of this trend. I think the biggest significance in terms of the kind of what does this mean for African policymakers? To me, the question is then, does this increase African agency, right? Because if the funding is coming from China, there might be a less limited kind of policy space, although like it has been shown in the Ethiopian case, for example, many countries have been able to negotiate conditions that are not necessarily detrimental. However, the kind of contractual power of the sort of the client, the African state, is likely to be stronger if there's no financial conditions associated with it, and so kind of increasing kind of local content percentage, or kind of forcing or steering companies to source locally, to hire subcontractors and so on. But then I think this is also quite tricky, right? Because if you think in Accra of the freeway, the motorway between Tema and Accra that is being built now, right? There was a whole point of like not making this a Chinese project, and it was then contracting to a Japanese, Ghanaian contractor, but then it was subcontracted to a Chinese company. So effectively now it's Chinese companies building it. So I think there needs to be kind of some reflection also on what happens in the subcontracting phase, because now if you drive very slowly, obviously, on the motorway, you will see Chinese workers on the construction site, right? So clearly they have won some sort of subcontractual arrangement after it was purposely not contracted to a Chinese company. Yeah.
We in fact, I think we are, even in the critical mineral sector, we're witnessing similar. I don't know whether you followed about our lithium deal. Of course, we had a similar conversation. Of course, I wanted to Australian company, and now a Chinese company is actually in the process or have already acquired majority stake in that Australian company, and therefore automatically the lithium deal becomes part of the project. So obviously, then they are part. So I think that subcontracting thing is a very a space for policy, discussion for African government. Yes. But then again, as you said, if you look at how, even to the extent that Chinese contractors are winning tenders from international sources like the World Bank, and that also tells a story of what that means for us in terms of our continuous engagement, right? I'm going to stay on the agency. I have a question on agency before I come to the question in the Q&A. I think even in your answer to this, you did raise question about agencies, but agencies run through, right? Even through the techno system, through the Triforce,
Mhm.
and all of that, right? So, um, as you said, that, rather than suggesting that outcomes are determined solely by Chinese firm or university, that emphasis on local role of local institutions, you mentioned, you referenced GIPC and all of that, right? Local businesses, local institutions, businesses, and so my question is it, can you elaborate on the local agency part? How does it look like in practice, and why has it become such an important concept in understanding Africa-China economic relations?
Thank you. I think there's been a lot of work on this. So I'll try to kind of summarize a few of the thoughts that I have been thinking about. I think one crucial part is that often it's kind of looked at in the negotiation between state to state. And so before the project is even implemented, the idea of like who has agency to shape which parts of the project. And the contractual conditions. And I think although that is an important part, it's very important to know how Ghana negotiates with China or how Kenya negotiates with China or Ethiopia. However, one of the important points is that actually actors across all scales can have agency. And so for example, in one of the projects the project I was looking at previously, the presence of a Chinese company in what was historically a marginalized region of Kenya actually opened possibility for the local government, the subnational government, to negotiate with the central government. So the Chinese company was not really involved in any of these negotiations, but the fact that they had been engaging with the local government, supported the local government in enacting their agency vis-a-vis the center of power domestically. There's also examples of NGOs or groups, activist groups that have managed to halt entire projects due to through legal cases that were brought forward. But I think also there's many examples of workers' agency that shouldn't be sidelined. And I remember when I was doing the research on the China malls, I went to all the China malls that literally all the China malls in the country. And in one of them, I went to the bathroom and there was like a picture, like a writing on the wall that said, "Our working conditions are really poor. Let's come together and, and do something." And then people signed, to agree. And this reminded me of, although it wasn't that specific China Mall, but it reminded me of the strikes that took place in Tamale in the EU Chinatown because of the poor working conditions and pay, which led to significant improvement of the working conditions there. So I think it's very, very important to kind of stress and remember the role of unions and the role that the agency that individual workers can play as well, which is something that I think often in the policymaking process is not really considered as much. And I mean, even in Ghana, the labor law is from 2003, which I think first it would need some updates in order to also include things like the gig economy, which obviously wasn't really a thing in 2003. And second, to kind of ensure that the protection of the labor law is integrated automatically in all the policy that is developed for industrialization or foreign direct investment attraction in order to kind of like set the standard of labor conditions that need to be respected across the country.
Right. Thank you. Thank you. I think you rightly so. I mean, obviously, for big ticket infrastructure or some of the deals, it's usually G2G. And so, like you say, the agency can flow from the individual level, from the union level, and also that has to be brought into the policy space conversation so that that agency can be recognized, and of course, through that, then we can see more impactful outcome for African.
Yeah,
Yeah,
and legitimized, right? Because I think if it is like openly inserted into these conversations, then it is legitimized. And I think that is a crucial part of for labor agency, especially.
Yeah. So I'm reading a question from Mamadou Ndiaye.
Yes.
So saying that thank you for the insightful presentation. I noticed that around 2013, the trade figures between China and Africa appear to move closer to balance, but the most recent data show a much larger trade imbalance in China's favor. Since Africans still mainly export raw materials while importing manufactured goods, this pattern seems similar to Africa's trade relation with many Western economies. My question is, beyond infrastructure, investment, and trade, what concrete mechanism is China implementing to promote technology transfer, industrial know-how, and local manufacturing capacity to Africa so that in manufacturing capacity, so that Africa can genuinely industrialize and reduce the structural trade deficit. So it's kind of what beyond the trade investment that we talked about. Now we talk about manufacturing. Is there anything that China is doing that is seems to show that they are interested in promoting technology transfer, industrial know-how, and local manufacturing capacity? So that I think you mentioned an example of Ethiopia or something, but maybe
Yeah. Now, to me, like I think the question here, I mean, there's different aspects to it. The first is like the extent to which technology transfer is also it's happening with firms that are non-Chinese, right? Because there's huge conversations around technology transfer more broadly, not just with Chinese firms. This is an issue with pharmaceutical companies. It's an issue that are mainly from India. There's an issue with any sort of Western type of production as well. So I'd say technology transfer is a much bigger, it is not a specific an issue that is specific to Chinese companies. I think in terms of the kind of where we do see outcomes that support mainly industrial know-how or kind of skill transfer or building local manufacturing capacity, these are the companies that are usually like there to embed themselves and become part of the economic sphere of a specific country, right? So it's not short-term looking type of investment. They're just there for the 10 years they have the the tax holiday, and then they just relocate elsewhere, which is still a very common thing that happens anyways. And I think this type of if the companies are fulfilling the requirements of the local law, can we then speak of what is China doing, what is China implementing? To me, it's a question of the companies respond to the context in which they operate, and they internationalize by following regulations that are both of their domestic market, their home market, their host market. And so I think the point is whether there can be more sustainable ways of engaging these companies as they arrive and begin operating, while strengthening the regulatory environment, and at the same time potentially developing collaborations with institutions like universities, right, to ensure that there is skill development and skill transfer through, for example, third parties like universities, which are, of course, a huge pulse for innovation. And I think this could support. But in this case, whether this would address the structural trade deficit, I still don't think so, because the products wouldn't be exported back to China. These products will stay in the African market. And I think that's where my kind of a bit of a fixation with standards now is very important, because the products will likely end up in the African market where they're being produced and neighboring markets. And so it's a point of like harmonizing the standards regionally and continentally in order to have better products, better processes of production, and better social outcomes in light of the broadening of the Chinese manufacturing base.
I think that part is more practical than that manufacturing being the means to balance, export. Yeah, I mean, I think it makes sense. More practical in terms of where we are now. Yeah. So there's a question from Hussein Askari. I know him very much. He's also a scholar. So he's saying that he has a question. I think one question here. Yeah. So is it did the model of financing move from that's just talking about the decline in loan financing from Chinese state backed, Chinese state owned enterprise. So he's saying that did the model of financing move from Chinese state backed loans for infrastructure to FDI or local financing, or did infrastructure projects stop being built? What are the structural deficiencies within the African countries that prevent their local traders and producers from competing with Chinese ones? Are industrial parks just an extension of Chinese companies, or are they local productivity boosters? And what can European countries learn from the Chinese in Africa? So I think it's a very packed, touching on almost every other aspect that you've mentioned from infrastructure.
Yes. There's a
So
lot of questions. Thanks so much, Hussein. I'll try to go through them all. So I think it's not just that infrastructure stopped being built. They're still being built, but they're being built either financed by different partners or they're being financed differently. So we've seen an increase in like public-private partnerships or building like toll roads. So the financing mechanism has changed. I think is partially due to the domestic economic conditions in China, but also like a shift in priorities in terms of like what the Chinese state-backed funders feel like it's not so not so risky or kind of strategic sector to focus on. And of course, one point to be made is also that while some major like the Chinese contractors have not really focused much on like feeder roads or small type of like ramification of roads, which is usually being financed by, for example, World Bank tenders. And we haven't actually seen Chinese companies competing for like feeder road projects as much as I guess some would have expected once the loans decreased, because they do actually continue to build quite large infrastructure just funded by different partners or international organizations, or mainly African governments, which are actually the largest funders of infrastructure. In terms of your question on trade, or sort of what hinders African countries to local traders and producers for competing. I mean, there's economy of scale is one of them. You know, there's obviously a much longer tradition of kind of large scale manufacturing. And because of the sort of price of the products, it's very difficult. I think one of the biggest structural issues is actually the lack of access to financing. So even companies that have wanted to further expand or move into production or upgrade their production processes, they struggle to access financing in African countries because it is extremely, as you know, costly to borrow. And there's very little policies that are targeting local manufacturers and traders, and instead a lot of policies that are attracting foreign investors. So I think there's like a mismatch between the kind of industrial policy objectives, or not a mismatch, but as it stands now, it's kind of like foreign investment driven industrialization rather than being driven by companies locally. And in terms of your final question on industrial parks, I think they do boost productivity in the sense that they do create a lot of employment, and they do actually engage often in creating intermediary products that can be plugged in other value chains, which I think is quite important, especially with challenges around supply and logistics that have come up, you know, from the pandemic onwards. So I think in that sense is not, you know, overall, I wouldn't say this is not potentially something that can have an impact, a transformative one at that. But I think there are still many challenges within industrial parks, especially if the assumptions that the policy is built around is still built around concepts in kind of economic geography or political economy that are not really representative of the current moment, that is characterized by South-South engagement rather, and by African markets becoming prominent sites. And instead, a lot of the policy direction is still developed based on concepts that see African markets as either or kind of southern economies as a site for production rather than an end consumer market, which changes the way, in my opinion, that you think about localization and upgrading. And finally, what can European countries learn from the Chinese in Africa? I think one key point is the kind of the shedding the paternalism in terms of the forms of engagement and kind of the attitude, the paternalistic attitude that has often characterized European countries' relations. And arguably the kind of like pragmatism that can be applied to engagement. But I would hope that European countries would, instead of focusing on competing with the Chinese presence in Africa, focus on how there is perhaps complementarity of offerings in terms of the priorities and underpinning ideas of development that actually manifest in different forms of engagement, and that they would listen to African partners more closely.
Thank you. There's a question. I think it's a request, a humble request. I think from an anonymous attendee. He wanted to find out as wondering how you manage to assess investment, financing, and project-specific data from Chinese companies. I'm trying to map those elements in Kenya. Also, how is China using the important economic weight that its companies are gaining in order to gain political and geopolitical leverage? But I think the first part is about how you can provide.
Yeah, no, absolutely. So in terms of the company registration data, I asked Ghanaian state officials whether I could access the data with like formal requests, and they kindly said yes. I also have additional data that informs the project, but it's much broader. It's part of a complementary project that I have in partnership with Ghana Revenue Authority and the Ghana Institute for Management and Public Administration. And so we do have unique data sets that we've developed in collaboration with Ghana Revenue Authority that allows us to compare the presence of all foreign direct investors, so sort of all foreign companies that are operating in Ghana, which is like a super helpful source of information. In terms of accessing Chinese companies and data, I do speak Chinese, which helps a lot. But I think generally it's quite a challenge to get comprehensive data. So what I try to do is try to triangulate different sources, mostly the government data sets, and then creating original data sets through different mechanisms. So the geolocation one has been quite an insightful. I have three: one of traders, one of manufacturers, and one of industrial clusters in Greater Accra. And to create that, it was extremely time consuming because I had to walk around. At times, assistants would ride a motorbike around Greater Accra, or we would like have a car kind of take us everywhere. We also did that on the Accra Kumasi road and in Kumasi as well, actually. And because we were trying to see whether the expansion of roads would foster companies to locate along the road, the answer is no. So we are back again at the lack of relationship within infrastructure and industry. So I haven't even presented the data because I think it wasn't very insightful. It was like, well, now they don't really locate near bigger roads. I think this was very, very helpful because what we did, we kind of gathered the data literally by going there. And we could ask questions around what products are they producing, and we would then map onto the type of like product category and standardize the codes of the products with the harmonized standard codes for import-export, which would then allow us to run additional analysis on it. So it's been a very, very long process. I mean, it took months to do it. For the three of them, it took probably 3-4 months to finish them. So it's been a lot of work, but it does really allow to run different types of analysis, especially if using like GIS software and things like that. So thank you so much. I hope that answers your question.
Yeah, sure. Thank you. I think maybe I'll ask the last question and then you can wrap up with your closing remarks because I
Mhm.
think we've exhausted our time already. So I think it's this from David, and he's asking, okay, I see great local opportunities across Africa right now as the global economy experiences a noticeable decline. Do you agree with that? And what kind of opportunity that you can identify to help the local economy? I don't know. Then you can give
So
your as well.
I can give my thoughts, I guess, in conclusion. I mean, I'm not really sure whether the global economy is experiencing a notable decline. I mean, if we look at like global trade as a whole is actually continuing to increase, is not going down, even though there is fragmentation in terms of how the trade is taking place, but it's actually still increasing. It's just flowing slightly differently, I guess. I think to me, like I see a lot of potential in terms of thinking of ways to support distributors and traders to add value adding activities to their interactions with Chinese firms. I think in general, if we think of the global value chain, usually the most value adding activities are the ones at the very beginning, like research and development, and the one at the very end, like marketing and distribution. But this doesn't seem to be the case in this moment in the interaction with Chinese firms. And I do believe there's a lot of potential because of the long history of trade networks across different African regions. I mean, in West Africa, these networks existed in pre-colonial times. During colonial times, they were crucial to overcome, prohibitive taxation that was being imposed by colonial powers. And after independence, they were still a huge part. I mean, if we think about, for example, Ghana and Togo, when Kwame Nkrumah had a more kind of economic nationalist approach of trying to protect industry, Togo went in a different direction, opening the doors to free trade. And the informal trade networks that connect these two countries actually brought a lot of the banned goods into Ghana. And there's been research
Yeah.
showing how this has hindered the industrial development of Ghana, right? I think so. This points to two aspects. First, is that the role of trade networks distribution and the kind of like capabilities in terms of like marketing and this aspect of the value chain, we should be the most value adding, doesn't seem to be doing that. And I think there needs to be like a serious focus on why this is not the case and what can be done to support the value adding activities in this side of the value chain. And then the second one is the type of competition that I guess this example of Ghana Togo highlights, and how actually the development of regional value chains is a major opportunity, especially as the global economic flows kind of change in geography. This could be a great opportunity to, support both the connectivity agenda as well as the kind of the creation of value chains that are complementary across country instead of competing.
Right. Thank you very much. We've actually finally arrived, come to the end. I think there are some good feedback in the chats, great discussion, insightful discussion, and people really appreciate the insight that you've shared. I think it's been very exciting discussion for me as well, and hopefully to everyone that joined. So it's been a very thought-provoking presentation, and of course, the feedback on the questions has been amazing as well. I think one key message I take away from the discussion is that, especially on the angle of infrastructure, is that infrastructure alone does not guarantee industrial transformation. As you rightly said, driving along the Kumasi Highway just to find if there's any if you're building road network, if it translate to any companies relocating there, and the answer was not, right? So rather development outcomes, as you said, depend on effective institutions, sound policies, strong local capabilities, and meaningful linkages between global and domestic investment industry. So I would like to say a very big thank you to you, Elisa Gambino, for doing this with us. And thank you to everyone that joined us. And this has been brought to you by the ACCPA, the Africa China Center for Policy and Advisory. This session has been recorded. So in the coming day or two, We are going to produce it. It will be made available via our YouTube channel. We will share it via email and across our social media. So hopefully you can follow the ACCPA on LinkedIn, on Facebook, on IG, on X, on TikTok, everywhere you can find us, and you get to send updates. This is what we do. And of course, we'll be doing similar discussion, I think later this month, and of course in the coming months as well. So thank you for joining. Thank you, Elisa, for this insightful section with you, and come your way very soon. Thank you.
Thanks so much. It's been such a pleasure. Thanks so much, everyone, as well, for the questions and engagement.
Thank you. All right.
Bye. Bye-bye. Thank you.